So what would it take for you to change your mind? What would it take for China to be investable?
Well, look, I'm obviously never the person
Are you
to ask that
just
question
not
to.
liking China at all? No matter what China does, you're not going to like it. I mean, is that a fair assumption to make? Is that the real picture when it comes to Carson block and China?
Well, I've always considered that the domestic equities were different from a governance perspective than the offshore equities, particularly the U.S. equities. There was always more recourse. The heads I win, tails I don't lose equation doesn't necessarily exist with domestic onshore equities. So that's something that we haven't looked at before. But if you're looking at buying Chinese equities in the U.S., that governance risk is always there. I don't believe the numbers. I do trust the numbers, or much more likely to trust the numbers onshore. But at the end of the day, China, in contrast to, say, Vietnam, which we are very constructive on, doesn't feel like it really needs foreign capital. And I don't think it intends to be accommodating to foreign capital on a long-term basis.
Okay, let's talk about the U.S. Overvalued, some say. We've seen, 47 straight sessions of record, and the most expensive in decades. Is that something to be concerned about?
Well, there's a debate as to what really drives, when you talk about the U.S. market, especially the S&P 500 or the Mag 7. I'm in the camp that, although I don't have the facility with math to really try to prove this out, but I'm in the camp that believes that what drives that index are flows. And so at the end of every month, U.S. workers, a lot of them, their paychecks go into their 401ks, which are retirement funds, and there's a robo bid for these stocks. And what happens is you reduce the effective supply of stock because you're taking out the active owners of stocks that will decide, hey, at this price I'm a seller, at a lower price I'm a buyer, and you're replacing that with a holder that will never sell unless and until it has outflows because people are drawing down their retirement accounts. So according to that view, as long as the labor market is reasonably strong in the US, which it is, you're not going to see outflows. You're just going to continue to see inflows, especially in those, in the most heavily weighted names in the S&P 500. So I have, in the past few years, I have looked back on my career as an activist short seller and, kind of done the math and felt like, well, I probably could have just been levered long the S&P 500, deferred my taxes, and gone through a lot less BS, and be in more or less the same position financially. So, I mean, that does make the market more fragile, but there's a Fed put, there's always a Fed put. Does there come a point in time when the system breaks and the Fed can't fix it? Theoretically, yes. In our lifetimes, I don't know. So I think for now, it probably just pays not to think too much, just close your eyes and buy, probably Mag 7.